Conversation with us, a man who will oversee the rollout of the GST, and so we at ET now decided to have a conversation with none other than Revenue Secretary Mr. Hasmukh Adhia to understand the entire maze that the GST is. But to break it down for our viewers, we are calling it the 10 commandments, the 10 things that the government wants to convey and the 10 things that you need to know about the goods and the services tax. Thank you very much, sir, for being with us. This really is the most ambitious tax reform. I know you've been traveling endlessly, you've been having a lot of sleepless nights, but at the end of the entire exercise, and the council met various times, all rates have been decided. How confident are you that the GST will both be revenue neutral as well as non-inflationary?
In the long run, yes, it will be both non-inflationary as well as revenue neutral. But for a year or so, we have to wait and watch, because whether it will be inflationary or not will depend on how much of benefit of input tax credit availability is passed down to the consumers by everybody. Now, this is something which we have to watch and see. Depending on that, it should be non-inflationary. The issue of revenue neutrality, of course, not only it would be revenue neutral, but it would be slightly positive, but that again after a year or so. Because for the first year, there would be issues of implementation, and so one will have to keep one's fingers crossed. We do hope that there will be positive impact, but one has to see. So that's why, for all practical purpose, we have estimated a very modest revenue growth in indirect tax side this year for us.
So at least you're being candid enough to say in our first commandment, whether it will be inflationary or not, that in the first 1 or 2 years, it could be inflationary. The long-term impact is non-inflationary.
1 year. And 1 year, I would expect that as far as inflation is concerned, less than a year.
Less than a year's time. The GST was touted to be as this one big reform that will add on to growth, 1.5% to 2%. A lot of compromises had to be reached because the GST had to be a reality and states were giving up a lot of their rights. How much growth booster do you believe this GST will be? And is there also a back of the envelope calculation on your revenues right now? You're saying you're being conservative with revenues. A lot of tax experts on ET now believe that the revenue loss could amount to about a 2 lakh crore rupee figure.
Revenue loss? After
to the government, yes.
I don't think that figure is very correct.
Okay.
There is no question of. There would be, of course, some kind of a reduction in our revenue, mainly on account of those items where we have given them the reduced rate of taxation. So there are deliberately, in order to make it subsidized for the poor man, for the common man, we have kept our tax rates very, very modest in certain items. So because of that, there would be some reduction of income. But we do hope that it will be made good by the larger and better compliance, because the GST system is kind of a self-compliance system in which one's credit is linked to the other person's tax payment.
Right. Yes.
So that's why it should be possible to, have a better compliance. So the better compliance benefit would be offsetting some of those losses. As far as the issue of GDP growth rate is concerned, well, what is happening is that there are a lot of inefficiencies in our economy, and those relate to logistics movement, those relate to redundancy, those relate to cascading of taxation. Now, all these inefficiencies are sought to be removed by the new system of taxation. Now, what it means is that some of these companies which were having this cost of redundancy, cost of logistics movement, they will be benefited by this. And that much benefit which will come to them of removing inefficiencies will be converted into new investment, and they would have some surplus.
Is there a figure that you are keeping in mind?
We don't have any figure, but some logistics people have made some estimates which I don't know, they are saying it close to 90,000 crore of logistics cost could be saved. Now, this, in addition to this, when the tax system of the country becomes simpler, there would be greater attraction for people to invest in the economy now. So we do expect that a lot of foreign direct investment should come. Even the domestic investors will feel more confident of investing. And so because of this, also the GDP growth rate should go up. The third reason why the GDP growth rate will go up is that because we are charging IGST on all the imports, there would be some kind of an effective protection being given to the domestic industry. The domestic industry, whatever taxes they are paying, the same taxes the imported goods will attract.
That's right.
So that means that there is a perfect protection now being given to the domestic
and a more
industry.
level playing field.
So that will boost up Make in India. On export side, on the other hand, where India has got a lot of potential.
I have a specific question on exports, and so I'm going to address this when I say exports and imports. But I'm going to talk about the second big talking point and the second commandment that we at TT now believe. Demonetization was a disruptor because of its shock value. GST has been in the making, and a lot of people have come to make their peace with the fact that there will be a GST. But even then, I'm sure as the Revenue Secretary, you believe this is going to be a disruptive exercise. So the first question is, how disruptive will this be? And the second question also on that front, sir, is that as far as the tax reform is concerned, the idea will be to widen the tax base. What is the kind of movement that you're expecting on both those fronts?
Well, I do believe that there would be some amount of temporary disruption, but not in terms of heavy cost. The disruption is more so because of the ignorance of the structure of GST that is there, you know. So it won't take longer for our people in India to learn and to adjust to the new way of life, because we always have seen that only when there is something which we are forced into, we learn and we do it.
That's right, yes.
So when there was a VAT admitted in India, when it was introduced in India in 2006, same thing was witnessed. People really used to say, in fact, that was a major disruption, because we are for the first time moving from single point taxation to value-added taxation. But now we have value-added taxation both in state taxes as well as in central taxes. So both these are already there. So now we are only combining the two and having a new value-added tax.
That's right, yes.
So the disruption would be much less as compared to what we had in 2006 also. But yes, because it's a new law, it takes some time for people to adjust to it.
Because this is a tax that is going to see India move from an unorganized economy to an organized economy largely, and a lot of unorganized business will move. What is the expansion or the widening of tax base that you're anticipating with this?
Well, we haven't done any such calculation as to how much more formalization of economy will take place. But I suppose it would be quite a bit. It is our sincere attempt to see to it that informal economy comes into the formal economy, so that there is a better counting of GDP, there is a better perspective on all the transactions that are happening, and we are able to cater to their needs also in a better way once everything is formalized.
You're being realistic when you say that to begin with there will be some disruption which will be taken care of as we handle the GST going forward, just like it was in the case of VAT. How long do you expect the transitional pain to last?
The main pain will be in the first 3 months only.
Okay.
That would be the main period of this thing. But after that, of course, everything should settle down. So that's why in order to take care of these 3 months, we have given certain concessions.
That's right, yes.
So those concessions will take care of the learning period.
And I'm going to come to those concessions in just a bit, but I think the third big commandment that any policy entails is a backup plan. What if something goes wrong? And we at TT now believe the big question to ask at this point in time is, what can go wrong? I'm sure there are different scenarios that you've worked out. What do you believe can go wrong? I mean, one of the things that people say on the street is there could be an entire inventory vanish for the first 1 month. There may be no inventory at all. Will shelves be empty? So I'm just trying to ask you, what can go wrong and how prepared is the government to handle that?
Well, it's very difficult to visualize what can go wrong exactly, precisely. But one of the fears which you expressed, that the inventory may vanish suddenly.
That's right.
Now that fear has not come true, unfortunately. We are already close to the date of closing.
That's right.
And people had expected that the stockist will not stock any more stock, and the shops will be without any stock. But that has not happened, unfortunately. And so that disruption period is over. Now after 1st of July, new stock at new rate will be available. So there is no question of any further shortages now. We are not witnessing any shortage in the market as of now, whether it is medicines or whether it is any other consumable goods or whether it is consumer durables. So people have got enough stock, and all the issues of transition have been announced. So people are taking care of that.
So how do you expect industry to behave through this phase, through the first 3 months and through also this phase when, a lot of people do not know what will happen to stocks, how will you be treating taxes on the stocks that they already have? There are white goods sales all over the place, but obviously, shelves are not empty. How do you believe industry to behave through this phase? And how is it behaving actually?
The industry has already understood some of those transitional provisions, and they are adjusting themselves accordingly. We are also on our part giving full page advertisement every day in all the newspaper, including regional newspaper, explaining the provisions of the law so that they have correct information and correct knowledge about it. And I'm sure they would adjust to the new way of life soon. There is nothing in particular that they need to take care of. And of course, one thing is there that they would have a lot of questions to ask. And that's why we have created multiple forum for asking questions.
That's right, yes.
And whatever outreach program we have undertaken, even if that is not sufficient, we will continue to be available for giving clarification on any issue that may arise. And for example, in today's newspaper, you must have seen that we have given, we are going to give 100 frequently asked questions on Twitter.
That's right, yes.
And those 50 questions replies are already printed, 50 more will be printed again. So these are all the questions which take care of their information requirement.
Yes. But sir, having said all of that, we are seeing a pattern where consumption is being held back. People want to see how this phases out. People want to see what will the scenario be after the 1st of July. Do you believe some part of that consumption, not to be killed, but perhaps delayed?
I don't think anybody would delay the consumption for the sake of, because the tax rates are all announced, and most of the cases the tax rates are coming down. So why would anybody hold back the consumption now? They would as well buy whatever they need, and they would consume it, as soon as, whether before or after. Now it's only a question of a few more days, in fact 3 more days.
That's right.
After that they will again start buying goods and commodities,
3 more days before India's tryst with GST. But the fourth big commandment that we at TT now would want to talk to you about is the markets. There was a lot of euphoria about the GST. People have been eagerly waiting for this reform. But now there is this concern that how will this impact earnings? Already people believe there will be an earnings impact on companies. People believe from a larger growth point of view that growth was curbed to 6.1 because of demonetization. What will GST do? What would your answer on both those fronts be? How do you believe GST is going to impact companies and stock markets and especially earnings?
Well, I'm not an expert on predicting the impact on the earnings of the companies because of GST. But the whole day your channel has been airing views of people on this.
That's right.
And if I understand it properly, they are all saying that by and large, the impact is very, very positive on most of the companies.
The other big thing, sir, that we at ET now would believe that is going to be a cause of concern, and I know the Finance Ministry has taken a lot of steps to ensure that, is anti-profiteering. A certain rate and whether the benefits will be passed on or not. How big a concern is profiteering, and do you believe the special committee has the teeth or the wherewithal to clamp down on profiteering if there were to be?
The authority has got enough teeth. The authority can force somebody to roll back the price increase. The authority can ask the company to, in fact, reimburse the entire extra price which is charged to the customer. And the authority also has a right to recover that entire amount of profiteering and put it in a consumer education fund. So all these powers are there with the authority. So, but the concern should not be there with the companies, because it is a tool which is meant only for people, big people, where in which case it is quite clearly proven that they have not passed down the benefit of input tax credit or reduction in their tax rate. So it is only in those very few cases of big companies where they need to worry about it. We are not going to use anti-profiteering for small shops and retailers as to somebody has not reduced the price of soap, because that is taken care of by competition.
That's right. I think one big area, and this is the 6th talking point that we now want to speak to you about, is input tax credit, and a lot of clarity is sought there. I'm going to voice a concern that some people in the industry have shared with us, that the law as it reads says that there will be no input tax credit on items that are used as parts of immovable buildings. So I'm just going to ask you whether it's telecom towers or pipelines or those big equipments that are used on ports and in buildings, what happens to that? Is there input credit on that or is there not?
The law says that these items which you mentioned, the telecom towers and the pipelines which are fixed to the land, they are considered as real estate things, you know.
Right.
So in real estate, because real estate is not part of GST,
That's right, yes.
we have blocked the credit of real estate for anything. So for example, if you build your own house, build your own office space, and if you have paid works contract to the works contractor, that 18% which you have paid to the works contractor, suppose the land is yours, then you would have paid 18%.
Right.
That is not available as input tax credit in your business because it is part of the real estate. So that is a credit we have blocked. And but the day when the real estate also comes into the GST, then that credit would be unblocked even for these items. But right now they are considered as a real estate thing, so credit is blocked.
I think that's a very important clarification that you're making because a lot of people have been going back and forth with their CAs and with their tax experts. But the counter argument to what you're saying also is that some of these things are very capital intensive, whether it's telecom towers, whether it's pipelines, whether it is those heavy machinery that is used at ports. These are not cheap items. Why should people not get input tax credit for this?
No, if it is a capital equipment which is acquired, it is fine. Okay, but
like for instance, a telecom tower, you know, there is a drive to improve quality of service. There will be telecom towers required. Pipelines, for instance, we are moving to a gas-based system. So I'm just asking, I mean, what's the rationale of keeping these things out? Could there be a rethink on this at all?
there could be, but this item I remember it was discussed in the second or third meeting of GST Council when we were making the law. And there was a lot of discussion for about 2 hours on these items.
That's right.
And ultimately the consensus which emerged was that let's not do it, let's block it, you know. So that was the discussion I remember. And now of course it is blocked. In future we'll have to change the law in order to allow it.
Do you believe that law would be changed?
Not so often.
And not so soon.
Not so often and not so soon, because you have to change the laws of not only central government but 31 states.
Precisely. I think one of the other things that and this is the 7th talking point that I'd like to pick with you, and I think you've already given them a relief, e-commerce, you know, tax collected at source from the vendors. They have said that there's so many vendors that use their platform that it's very difficult, it's a nightmare to collect the taxation. My question to you is, you've given them a relief now because you've deferred it. But what could the possible solution to this be? Have we just delayed an uncertainty? Because deferring means there will be an eventual decision on this.
No, the decision is very, very clear. The law says that they'll be made to pay, say they will have to collect the tax at source.
Yes.
So that is a TCS provision, tax collected at source.
Yes.
The only thing is because some of them were saying that our vendors are still not registered and we have to deduct money on their behalf, we have to put their GSTN number. So that's why they had asked for time. So we have given them 2 months time to adjust to it. The same provision will be applicable from 1st of September. So after 1st of September, the ECS aggregators will have to deduct TCS money from whatever transactions are happening through them.
Oh, I'm glad you're making this clarification, because the understanding in the industry was that you may change the law because it was very nightmarish too.
There is not going to be any.
So there will still be TCS for e-commerce companies.
Yes, but 1st of September after that. Similarly, in case of TDS, because TDS is only for government authority. So that also, because we have to put in place a mechanism for the government authorities to deduct money and to pay it in the GST and common kitty. So that process is going to take some time. So that's why we are saying we will take 2 months for that also. So the TDS is for government authority. When any contractor is made payment by government authority, there was a provision for TDS. That also is being put on hold only for 2 months. But from 1st of September, it will become applicable.
So before I move on to specific queries that the industry has, I want to ask you a big picture question. I think you've clarified on this, but there are still people who are speaking in 2 different languages. Returns. How many times does a return have to be filed in a month? Because there are some reports that say thrice. You have to file the return, you have to upload invoices on the 10th, then approve or reject purchases on the 15th, and 20th you have to make the payment. So what is the process there, one wants to understand?
This is a favorite question I'm getting in every interview. Look, I think there is a lot of misunderstanding about it.
I just want to clarify the air.
So first of all, up to 20 lakhs, you are neither becoming registered dealer, now you have to file a
That's
return.
right, yes.
After 20 lakhs up to 75 lakhs, if you avail of the composition scheme, then all you have to do is to file one return. That is in 3 months. One return in 3 months.
Oh, it's not multiple times.
No, it is one return in 3 months if you are a composite dealer. So one return in 3 months, and that also you have to only give the total turnover details. You are not supposed to file invoice-wise detail if you are a composition dealer. So how simple it is for small people. Beyond that also, again, if you are more than 75 lakhs, but again you are B2C only, you are only a retailer, your turnover may be 10 crore, 20 crore per annum. But if you are only a retailer, you are only filing return of total turnover between 1st to 10th of the month. You have to give the total sales turnover between 1st to 10th of the month. And that is GSTR number 1.
Does B2B
and B2B are the only ones, and that they are only 10-20% of the total registered dealer. They are the only ones who have to file invoice-wise detail in GSTR number 1. The return number 1, which is between 1st to 10th of the next month, they have to file only they have to file the invoice-wise detail. The second return, which we call GSTR 2, my only regret is I wish we would have named it as 1A, 1B, 1C. These are three parts. These are three parts of the same return. So the second return are the details of your purchases, because of which you are going to get your input tax credit. Now this return is not supposed to be filed by you. It will be auto-generated by the computer. We are only showing it to you so that you can check all your purchases are intact. They have been reflected. The return number 2.
This is also happening once in 3 months.
No, that is every month. Every month. Okay. But that is for these people, you know, this regular dealers, not for composite dealers.
Right.
So that is only once for your viewing. And if you find there is no change, everything has been reflected there, you can just click it. But if there is a purchase transaction which is missing because the seller of yours
has filed it,
has not filed it, and that's why it is missing from your purchase side. So then you can add that transaction and then accept it. So there is a facility for you.
So it's going to be generated by the government or
by
the
computer.
And you just have to perhaps
you have to just click it.
Okay,
and the third return also, which is based on your sales details, your purchase detail, your tax liability comes in your final return. So that tax liability is being shown to you in your GSTR number 3. And so if you accept it, you simply accept it and pay the money. That's it.
Why don't you go back calling it 1A, 1B, 1C? I think that would be
I think now that we already made the rules and advertise, otherwise it is not 1, 2, 3, it is 1A, 1B, 1B, 1C.
How much of a hand-holding do you believe the small, really marginal traders will require? Because they are the ones who are embracing this whole software and this IT-related system.
Look, first of all, earlier everybody above 10 lakhs used to file a return.
That's right, yes.
And most of the states had a requirement of filing electronic return. All big states had already introduced electronic returns. So instead of 10 lakh, we have taken it to 20 lakhs. And they know how to file electronic return on VAT also. And so it's not much of an exercise involved in that. There is not much of handholding also required. But still we have said to all our VAT, excise duty and service tax offices, they will all be converted into facilitation cells.
Okay.
So any trader can walk into any one of these 3 offices of central government or state government.
And he'll be helped out.
And he will be helped out.
I think we turn focus and talk about the 9th big commandment, which is specific queries. The used car, let's begin with that. It is liable to a 28% taxation. There's a clarification that you'd like to make on that?
Well, I think there is a lot of misunderstanding. I saw some piece in the newspaper today about it. On used car, there is no tax.
There is no tax at all?
There is no tax except on the marginal amount of profit made by a dealer who is dealing into second-hand car.
Oh, okay. So the tax is on the marginal amount and not on the
not on the total value. So first of all, if it is an individual selling a used car to another individual, you don't have to pay tax. GST.
Yes.
That is number 1. If there is an individual selling a car to a company also, because it is not a sale in the ordinary course of business,
I got that.
That also is not required.
It's only when that comes.
It's only when it is purchased by a second-hand dealer. There are some companies which are expertised into it. So that second-hand dealer buys the car, and then when he sells it, he will pay GST on the margin of it,
That's an
not on the original price, because we can't charge tax twice on the same amount.
Yeah, exactly. That's an important clarification because I think a lot of queries came in on that. Clothing, as far as clothing is concerned, items under 1,000, 5%, items above 1,000 per piece, 12%. Does the price include or exclude tax?
No. If at the retail store level, if the label of the goods say that this cloth is say 1,100 rupees, then 12% will be charged. If it says it is 999 or 900, then 5% will be charged. So it is excluding the tax. So the value of the goods, which is there. So whatever is the price of goods, which is labeled, if it is below 1,000, then 5%. If it is above 1,000, then it is 12%.
So it's tax on the value that is displayed.
Yes.
Okay, that's important. How do you define one single item? Everything that's on one hanger, because there are things that come in a pack of 3, there are things that come in a pack of 4. How do you decide one item? Because one thing can't be pulled out. So I'm just asking you. I mean, that's another clarification that a lot of tax experts are saying.
I have no idea why people are raising such issues, but that gives us a little bit of doubt as to, is it a kind of a scheme they are planning to sort of, I don't know why people are asking such questions. These are all ordinary questions which they can probably decide for themselves, unless they have got a big large scale sajish to, do something about.
Okay, one last question before I let you go, sir. There has been a lot of back and forth on exports and imports and how they will be taxed. SEZs, if there are 2 SEZs that are operating in one state, what happens to that? For the record, how will exports and imports be taxed in the GST? How will they be treated in the GST?
Well, when you import anything in the country, except when you are importing for SEZ, if you are directly importing and taking it to SEZ, from bonded area to bonded area, you are only simply taking it in container to the bonded area, then of course there will be no tax. Okay. Other than that, the entire IGST will apply. On the imported item.
Okay.
So even if you are importing goods for say EOU, 100% EOU, or you are importing it for domestic tariff area unit, whatever, on that entire IGST will be paid. If you are sending goods to SEZ, if you are selling goods to SEZ, then again they are 0 rated. So you can send them without payment of duty if you are selling it to SEZ. So, or you can pay IGST and take full refund. Both this methodology are available. On export, again the same thing. If you are either doing physical export or if you are sending goods from DTA to SEZ, there are 2 methods. One is you pay full IGST and claim refund. Okay. Another method is ki you don't pay tax, you just give a bond and on all your inputs which you have used, if there are any taxes which are there on the inputs, you can ask for refund of it. So these are the 2 methods of exporting, both in physical export and in export to SEZ.
On that note, sir, I think important clarifications have been made. The 10 commandments are here with us and we wish you the very best with the GST rollout. Thank you very much, sir. Thanks.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.